It's a very serious, very dangerous thing. And these sorts of revelations, if there is a revelation, can collapse the entire inflationary system in an instant if something is found out that shouldn't be found out. This is dangerous stuff.
Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for MS62 numismatic Liberty at no extra cost. Call us for details.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Rafi Farber from the Endgame Investor on Substack. Rafi, thank you so much for joining us today.
Hey Elijah, good to be back, and I'm excited every day now.
Yep. Like, and I'm more excited every day, it seems like, with even Trump now talking about auditing Fort Knox. I think that's a fantastic idea. We'll see what happens with that. Gold outflows from London are incredible in the last couple, I guess the last month or so, flowing over to the COMEX. We're seeing all-time highs in gold. Where would you like to start?
Well, we could start the audit of Fort Knox. What the hell?
Definitely. I mean, it seems like Rand Paul was really pushing for this. Elon Musk then was on it. Now Trump is addressing it himself regarding that Fort Knox will be audited, and they won't be happy if not all the gold's there. So how do you think this will play out?
I'm having these memories from back in 2012, from the Ron Paul 2012 campaign. That's pretty much when I woke up and understood that everything was an illusion. Ron Paul was a big part of that, as he was for many of us, I think. And I remember back in 2012, I think Trump was running also for president, but that was when he was still a joke. I think he was speaking at a Ron Paul friendly event or something, and he was saying I love Ron Paul, he's a great guy, but he can't win, and everyone booed him. So that was like the first hint that maybe Trump really did like Ron, and maybe he wasn't such a bad guy, even though he was kind of a joke back then. So the fact that he's taking this seriously, an audit of Fort Knox is like a thing that matters. First of all, it means that to some degree, not to the full extent, but to some degree, he understands that gold is money, right? Because you're not going to audit, Cushing, Oklahoma, for how much oil is there. That's all. You're always keeping track of that. And the only reason that you wouldn't count gold is because you think it's irrelevant. And it's just like a big fortress of a bunch of metals stacked in piles that nobody ever does anything with. That's how the Fiat enthusiasts describe it. And on the surface, that's correct. But it represents all the money circulating around. And if you as we all know, if you fake the amount of gold certificates, you create a business cycle, you create a boom bust, and that's it. So I think the gold is there. What do I know? I'm not an intelligence officer. I don't work for USAID or the CIA. I don't really know exactly what's there, but I wouldn't be surprised if the gold is actually there. And the issue is who owns it and how many claims per bar or per whatever it is. I have a feeling that they would rehypothecate and they would encumber it multiple times for whatever bank purposes. So the audit shouldn't really primarily be focused on, is the stuff actually there? Can I see it? Can I hold it and weigh it? Okay, fine. But who owns it exactly? And so you got to find the paper trail, and that's the big deal. And if we find that there are many claimants on each bar, there's going to be some mayhem. I mean, this is a dangerous thing to do. The core of government power, of corruption, the core power of corruption, what causes corruption and what makes it so powerful, is the inflationary process. It's not something you can just start, right? It's something that you have to establish huge amounts of trust and reliability for. And that's what the United States established after it basically conquered the world after World War II. It defeated the Nazis, managed Europe, put together the West as we know it, put together the entire post-World War II political reality. And so everyone relied on the U.S. And from that power, it was able to inflate over the gold supply. And that inflation goes into everything. everything that is corrupt because of the inflation. So you can't fix the education system without stopping the inflation, because the inflation will find its way into the education system to fund something that should not be funded. That's what it does. So to bring it back to your question, or to the topic of an audit, auditing Fort Knox, and also it's not just Fort Knox. There's some in New York and there's some in Denver. I mean, the gold certificates that are on the Fed's balance sheet are a collection of all three. Fort Knox is the biggest one, but there's one in Denver, I think one in New York. So assuming all these three places are going to be audited, you're going into the bedroom, or the holy of holies of the deep state, because that is the core of their power. They don't want you to know that it is. They might not even be conscious fully that it really is, but that's it. That's the bedroom. Or the dungeon, right? Whatever the most important room in the house is for them. So auditing it, if they do it honestly, if Trump does it honestly, and I think Elon Musk was saying that he's going to like live broadcast it or something. I don't know if that's going to happen. He might just be sensationalist, but it's a very serious, very dangerous thing. And these sorts of revelations, if there is a revelation, can collapse the entire inflationary system in an instant if something is found out that shouldn't be found out. This is dangerous stuff. It's necessary, but it's dangerous.
Now, the theory out there is that the U.S. has, as you mentioned, kind of rehypothecated the gold or sold it multiple times and so on to suppress the gold price. Your hunch is that probably has happened. So it's more not so much that the gold's not there, but that multiple people have claims on it.
Yeah, that's my theory. I think it would be too irresponsible, like even for the deep state, to actually get rid of this stuff, when really you don't have to move it anywhere. You can just assign different owners or promises to different people, and they say, well, you have this now, you can trade against it, and then everyone thinks they own it. But that's what the inflationary system is. You don't have to move this stuff. So why would it not be there if nobody actually has to? They're not going to like make a deal with a jeweler, like, do you want some of our gold in Fort Knox? You can make some necklaces. That's not what's happening. It stays monetary. If it stays monetary, there's no reason for it to move. So it'll probably be there. The question is who owns it, and that's a bigger question. There's some theories now that maybe the gold coming in from London, and we can go into this next topic if you want me to hone in a question, but it could be that some of the gold that's transferring from London or wherever it's coming from into New York could be the federal government trying to cover its lack of supplies before the audit. That I don't know if that's true. That's pure speculation, because nobody knows. It's just like stories that people are saying. Maybe. I mean, we'll see.
It does seem like it's all happening at once here, but that those London outflows are quite surprising. We're seeing millions and millions of ounces in January flowed from London over to the COMEX. So any idea what that is all about? If it's not just to cover, any missing gold at Fort Knox?
I've been trying to figure this out since 2020. So first of all, what I am seeing, before I get into some theories, and I still can't answer this question fully, but I can give some analogies that might shed some light on what's happening. So if you look at the charts of the gold supplies in COMEX, first of all, we don't know the eligible supplies, the stuff that's not for sale or not for sale publicly against contracts. We don't know who owns any of that. That's totally opaque. No idea. If you look at the amount of eligible gold not for sale, that's the spike in 2020 of that supply versus the spike now. It's about the same in quantity. It's a little less now. We're not quite at the record highs. We're close. But it's taken a quarter of the time that it took in 2020 to accumulate the same amount of gold. So we're going at quadruple the speed, assuming this stuff is real. And now the question, why is this happening? Look, the dry answer is that the futures are worth more in New York than the spot price in London. So you buy the spot in London, you sell it against futures in New York, and you pocket the difference. That's the dry answer as to what. But the deeper question is, why is gold worth more in New York than London? That's what we want to know. And I don't have an answer for that question other than to say that when your body's in trouble, when you're in a panic, what's going to happen is like the blood's going to exit your extremities and it's going to go into your core. Either you're in a fight or flight, or you're in a hypothermia situation where you need to preserve all your heat. Your hands will start freezing, you'll start shaking, and your blood will head to your main organs to protect them, to keep them warm. So we're in a dollar world. The center of the entire fiat system, not just the United States, but the entire planet, is the US dollar. And when there is stress in the monetary system, just like your body does, it takes blood out of the extremities and moves it to the core. That's what's going to happen when there's monetary stress. It happened in 2020 because there was severe monetary stress, right? They shut down the entire planet for very logical reasons, of course, as we all know. And the blood is the gold. Like the dollar is just the derivative, but the actual liquidity is the gold. The dollar trades above that. It's moving into New York, and it's moving into New York again, because I think there are serious problems in the monetary circulatory system. And that's going to come out. We don't know exactly how, but there's going to be news of some kind of financial collapse somewhere. And all the gold bugs and the metals crowds are going to say, yeah, well, we told you. We didn't know exactly what it was going to be, but it was going to happen. So we'll see what it is. There's going to be one. It's going to fall. It's going to be soon.
Now, when it comes to gold outflows, we're also seeing that from GLD. You've been reporting this. I believe it's GLD and possibly also SLV is seeing outflows right now. So what is the significance of this?
Okay, so if I'm trying to figure out why someone would take gold from GLD or SLV, right? First of all, we contrast this with 2020. In 2020, gold was moving from London from London officially. The claims were London claims, but I think the gold was physically coming from Switzerland, most of it, to fulfill those claims. So in 2020, the gold was going mostly into the ETFs. Right? It was coming from London, going into GLD, the silver was coming from London, going into SLV. You saw the holdings of GLD and SLV just go way up with the price, so in tandem. Now, GLD and SLV are pretty much even since mid-December, when this huge runaway move started happening. Right? And the other hint that we have that something weird is going on in GLD and SLV are the borrowing fees, which was pointed out by Ronnie Stoufferle and some of the other big, and Greg Hemke, I think, pointed it out. A lot of the big guys in the space brought attention to this. What's his name? The name is the Destroyer, the Ronan Manley, Ronan the Destroyer, right? That's the guy. So he pointed it out also. The borrowing fees on these ETFs are, on GLD yesterday was an all-time record, 10.44%, if I'm not mistaken. So that means that people are paying to borrow GLD. They're paying a lot of money to borrow GLD, and they're presumably, I have no proof of this, they're redeeming baskets of shares for physical bullion and doing something with it. Why would they pay a 10% fee to do that? Well, probably because it's cheaper than getting gold at any other source. Basically, the difference between now and 2020 is that there's demand for gold outside of the ETFs to pull the gold out of GLD and SLV to put somewhere else. Somebody wants the physical more than he wants the paper claims. That's the difference now. In 2020, everyone was running after gold and running after paper claims, and it was also hitting the other difference. It was hitting the retail market. Right now, it's not yet. The premiums are still dead in the water. So that suggests that this is a purely wholesale bank derivative problem and not a physical supply problem. So it's slightly different, but similar creature. We'll see where it goes, because these flows can't last forever. There's a finite amount of gold to come into the U.S. from other sources. It can't keep going like this.
And what is that where we're seeing a strange situation where there's so much demand on the futures market and the COMEX and all that, but the retail market is premiums are super, super low on the buy and sell side. So it seems like the little guy isn't buying and the big guy is, or what's going on?
I've tried to reason that out also. And what I've come up with, what makes sense, is in 2020, there was a real panic. It was like an end of the world panic. Like nobody knew what this virus was going to do. Even the people that ended up dissidents weren't at that point. I wasn't. I was suspicious, but I wasn't like, oh, this is crap. I didn't know. Maybe it was serious. Maybe the world was ending. They're going to shut down the world. Maybe we're all going to die. I had no idea. Nobody knew. Everyone was scared. So if you're scared, what do? You buy gold and silver. And stocks, right? Stock portfolios were crashing hard. It was scary, especially if you owned a lot of stocks. So people saw their stock portfolios losing dollar value, right? And the world is shutting down. Are any of those companies that they own are going to survive? So what they do? Well, they contributed to the selling. They sold some stocks. They bought some gold and silver. They wanted some coins to make them feel better. And it spread out into a lot of people, not just the metal stackers. But what do we have now? Okay, stocks are still right near all-time highs. The economy is functioning in the sense that we're not locking down anything. That there's no real end of the world vibe here. There's everyone knows something's happening because something's definitely happening. But you have to understand it's only going to be understood by people like us that these things are very important to. You talk to the normie on the street, oh, they're going to audit Fort Knox. They'll be like, what's Fort Knox? Oh, I heard there's a lot of gold there. Well, who cares? What does that have to do with anything? What do I care? So you're going to have the standard people like us that are still buying, that stack, because we always stack. We buy a certain amount a month, every 2 or 3 months, whatever it is. So that's not going to inflate premiums. It's not going to push them higher because we are what we are, and we always buy. What you need is a panic in the public, and what you need for that is crashing stock prices and the gold to S&P 500 ratio going a lot higher, a lot faster. That'll freak people out, and that will spike premiums really quickly. So we haven't seen that yet, but we will.
It has been really interesting this year as we've seen gold continue to run up, really, really close to 3,000 now. Just your general take on that and where you see gold heading from here. Maybe if it is shown that there's something fishy going on at Fort Knox, do we break through 3,000 pretty soon here?
We could break 3,000 any hour now. It could be in a matter of hours, but it doesn't matter if we hit 3,000. It'll make some headlines, but that's what we got to really get over. The dollar amount doesn't really matter that much. We can have a party once it hits 3,000, but once it hits 3,000, then so what? Does that say anything other than it's a nice round number? Not really. What we'd have to see, what would really change things, is if we see gold going up and other assets going down, like bonds and stocks and the dollar index itself. If they all go down and gold even stays stable to go up, then that's scary for a lot of people, right? Because gold goes up. If everything's going up and gold's going up, nobody cares. So let's see gold at 3,000 and the NASDAQ down 5% in a day. That would scare some people, and that we should pay attention.
You've talked a lot about this idea of gold revaluation, and a lot of people are talking about this, especially, with Scott Bessent as the Treasury Secretary being a big gold fan, and, Trump wanting to audit Fort Knox and all this stuff. There's a lot of buzz about what if gold was revalued. In your opinion, what would that mean, and would it really mean anything at the end of the day? You've talked about how this would actually just be a dollar devaluation. What is your take on that?
Yeah, so that's what it is. It wouldn't exactly be a dollar devaluation. It would be a debt devaluation. This is what I've emphasized on, and again, maybe that's around my channel, on my Substack, since I began this thing. Since I became a talking head in the gold and silver space, that the gold standard never ended. We're still on it because of the regression principle, because of the Misesian regression principle, regression theorem. I prefer saying principle; it just sounds better. All prices reach back into the past. Every economic transaction that we engage in today is connected to every economic transaction in the past, just like evolution. right? It always goes back to, you know, DNA recombining and meiosis and reproduction. What we are today is a result of every single relationship in the past, just definitionally. So you can't get away from gold. The dollar started as a derivative of the gold that existed somewhere, and prices evolved from there. The difference now is that most of what is the dollar is made up of debt to pay those same dollars, and it loops back in on itself. So a gold revaluation, gold is part of what the dollar is because because the issuer of the dollar, the ones who issue those things, the Fed has claims on gold and it has claims on debt paid in dollars, which are claims on gold, right? It all goes back. So on its balance sheet, it has this lie that everyone knows is a lie, and everyone just thinks it's stupid. That says that the gold that the Fed has a claim on, which is in Fort Knox and other places, that's $42.22. Ha ha! Isn't that funny? So that means that all the dollars that are owed in debt are redeemable for gold at $42, which they're not. So when you okay, so let me take this to a simpler analogy. That when, let's say your kid has a few coins in a piggy bank, right, and then your other kid, this just happened in my family, and somebody needs like a quarter, right? So he goes to his piggy bank, takes a quarter, replaces it with an IOU 1/4 in the piggy bank, right? Is the IOU 1/4, is that part of the money supply? It's not part of the money supply. It's on par with a quarter. That means that whoever has this paper is owed 1/4. But if there aren't enough quarters, then how many papers do you need to get 1/4, right? If you keep issuing the papers and there's not enough quarters, so the paper isn't worth 1/4, it's maybe worth 5 cents, 10 cents, depending how many quarters actually exist, right? So most of the dollar is debt. It's debt to owe dollars, but to owe what? Like, what am I owing? And that is, you're owing the gold at 42. But if you say, oh, that's a lie, I don't have enough gold to redeem the $6.8 trillion that are on the Fed's balance sheet at $42 an ounce. There's just not enough gold in the solar system to do that. So we're gonna say this is a lie. We're gonna admit it, and we're gonna say, you know what, the exchange rate is actually 42,000, not 42. Because the amount of dollars has gone up 1,000 times. So what happens? The debt, those papers that said, you know, I owe you a quarter, they get devalued to almost nothing, which means all of the institutions that own this dollar denominated debt, they lose all of that value overnight. Because you changed the number on a balance sheet, it sounds so stupid, but that's what will happen necessarily, because whether you want to believe it or not, whether you want to believe that gold is money, or you think that money is just a social construct like gender or whatever, it doesn't matter what you think. Gold is money. So that's what will happen. It will devalue the debt, and all the banks that own that debt will die almost instantly.
It seems like, so many different stories in the gold market these days. It really is good to have you back on, just to kind of clear this up for a lot of our viewers. And there's a lot of signs pointing in these directions, but it's important to kind of put it all together here. So we really appreciate your time, Rafi. If our viewers are interested in learning more, they can go to the endgameinvestor.substack.com. We'll put a link in the description of this video right next to your name there. Any last thoughts before I let you go, and tell us a bit about your Substack?
Yeah, my Substack, I try to be entertaining. I try to be fun. I try to make it fun. I'm having a lot of fun lately, so it's been a lot of fun. Very entertaining for me. I think the last post I have up there is free. And I'm looking at it now. One of my subscribers sent me this chart that shows a chart of gold in paper marks in the from 1919 to 1923, and compares it to a chart of gold now. It looks pretty similar. Some of my subscribers are pretty fun too. Basically, I'm just trying to give a solid philosophical backing to what's going on now, so that no matter what happens in the market, you know that it is a sound practice to accumulate sound money in a world where money is literally falling through our hands like sand. It's really that way. And what's my advice? Look, I saw this video recently. Maybe it was an Epicurious thing on YouTube. It's this guy that he's really famous for eating hot peppers, and breeding hot peppers. So he puts like the hottest pepper in the world in his mouth, and he eats it. And they're like, well, how do you what's your advice on eating peppers? So he's like, enjoy it. It tastes good. Okay, it's hot. It's gonna burn you. It's gonna make you tear up. It's gonna burn your throat, maybe burn your intestines, whatever. But it's not gonna kill you. Enjoy it. So we're going through like a hot pepper phase now. It's gonna be unpleasant, but if you're prepared, you'll be fine. Enjoy it. It's fun. This is fun. If you're not having fun, relax. Just watch. There's a lot going on.
Fantastic. Well, we really always appreciate your time, Rafi. Thank you so much, and God bless.
You too.
Right now, you can swap any uncirculated 1-ounce gold coin or 1-ounce carded bar for an MS62 $20 Liberty with no extra premium whatsoever. Just ship us your gold coins or bars and exchange them for MS62 numismatic Liberty at no extra cost. Call us for details.